Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. So welcome to this podcast, episode 130, titled Renewable Energy Stock Picks. It's presented by Investing for the Soul. InvestingfortheSoul.com is your site for vital global ethical and sustainable investing mentoring, news, commentary, information and resources. Now remember that you can find a full transcript and links to content, including stock symbols and bonus material, on this episode's podcast page located at investingforthesoul.com/podcasts. Also, a reminder, I do not evaluate any of the stocks or funds mentioned in these podcasts, nor do I receive any compensation from anyone covered in these podcasts. Furthermore, I will reveal to you any personal investments I have in the investments mentioned herein. Additionally, quotes about individual companies are brief. Please go to this podcast's web page for links to the actual articles for more company and stock information. Also, some companies might be covered more than once, and there are also 2 article links below that time didn't allow me to review them here. I'm beginning with this article, which is from the famous Zacks research team. It's titled 4 Stocks to Watch in the Path to Decarbonize the Future, and is by Rimi Singhi and found at sg.news.yahoo.com. Here are brief quotes by the author on each stock. Clearway, along with its subsidiaries, owns and operates a diverse portfolio of contracted renewable and conventional generation, along with thermal infrastructure assets in the United States. Furthermore, Clearway's asset portfolio includes more than 9,000 megawatts of wind, gas-fired power generation facilities, solar and thermal, as well as district energy systems. The Zacks consensus estimate for Clearway's 2023 sales and earnings implies year-over-year growth of 15% and 149% respectively. It boasts a long-term earnings growth rate of 10%. Clearway currently sports a Zacks rank number 1. That's a strong buy. 2. NextEra is a leading provider of wind and solar energy in the United States. The company also operates in Canada and has a growing presence in Latin America. NextEra has many renewable projects in its backlog, and their completion will ensure reduced emissions. The company expects to be able to add 33 to 42 gigawatts of new renewables in the 2023-2026 timeframe to the generation portfolio via clean energy investments. The Zacks consensus estimate for NextEra's 2023 and 2024 earnings implies year-over-year growth of 8% and 8.2% respectively. The same for 2023 and 2024 revenues indicates a year-over-year uptick of 27% and 9% respectively. The company surpassed earnings estimates in the last 4 quarters, the average surprise being 6.2%. It boasts a long-term earnings growth rate of 9%. Next, it currently carries a Zacks ranked number 2 buy. 3. Brookfield is a renewable energy firm that operates hydro, wind, solar, and storage assets in North America, South America, Europe, and Asia. Hydroelectric power comprised 50% of its portfolio in 2022. The firm remains focused on the expansion of its expertise in wind, solar, and energy storage capabilities through acquisitions and development projects. Over the past decade, Brookfield's earnings have witnessed a compound annual growth rate of around 10%. Brookfield is committed to maintaining a strong balance sheet to support further expansion. The Zacks consensus estimate for Brookfield's 2023 and 2024 earnings implies year-over-year growth of 120% and 275%, respectively. The firm boasts a dividend yield of more than 4% and has increased its payout 5 times in the last 5 years. Brookfield currently carries a Zacks rank number 3, which is a hold. 4. Vestas is a global leader in the wind energy sector. It has a wide range of expertise, including the design, manufacture, installation, development, and servicing of wind energy and hybrid projects worldwide. With over 157 gigawatts of wind turbines installed in 88 countries, Vestas is a major player in the industries. The Zacks consensus estimate for Vestas' 2023 and 2024 earnings implies year-over-year growth of 126% and 189%, respectively. The same for 2023 and 2024 revenues indicates a year-over-year uptick of 7% and 25%, respectively. Vestas currently carries a Zacks rank number 3. End quotes. The next article is again by the prodigious research output group InvestorPlace. It's titled 3 Renewable Energy Stocks to Capitalize on the Sustainability Surge. It's by Rick Orford and found on InvestorPlace.com. Now some of what Mr. Orford says about his stock picks. 1. First Solar. The continued growth in solar power as an alternative energy source has made companies like First Solar an important part of the government's plan to transition to a green economy. The company is one of the top producers of photovoltaic cells used in building CDTE solar modules that transform sunlight into electricity, making it an invaluable component of the solar power production chain. The growing demand for solar energy has led to First Solar's acquisition of an Ohio facility that serves as its distribution center, enabling it to scale manufacturing. Looking forward, First Solar expects net income per diluted share to end between $13 and $14, almost doubling 2023 results, and net sales to be around $4.4 billion and $4.6 billion for 2024. With the government's strong push to go green, First Solar has tremendous potential, making it one of the best choices for renewable energy stocks to buy. 2 is Broadwind, specializes in wind energy equipment, clean energy structures, and clean technology used by different sectors. The company agreed with MarketAxe Holdings to sell earned advanced manufacturing production credits, which will help significantly improve its liquidity profile. Broadwind's latest results showcased impressive growth in fiscal year 23. Revenue reached $203.5 million, 15% higher than the previous year's reported revenue of $176.7 million. Despite a slight decrease in orders and backlog from last year, Broadwind is still optimistic about future prospects, especially with expectations of accelerating wind development in the latter half of 2024. 3. Beam Global is a clean technology innovator that designs advanced solutions for energy storage, electric vehicle charging, and energy infrastructures. Its patented infrastructure product, EV Arc, Electric Vehicle Autonomous Renewable Charger, uses integrated battery storage and solar power that provides a power source for electric vehicle charging stations. The company also offers street furniture and street lighting products globally. The company finished fiscal year 23 with a record revenue of $67.4 million, a 206% growth compared to last year's $23 million. Earnings for the year improved to a net loss of $1.30 per share, an increase of 34.6% compared to the previous year's loss of $1.99. In addition, the company reported positive full-year gross profit and remained debt-free with an unused $100 million line of credit. Its significant backlog and contracts mean the company should have ample cash flow to fund its future operations. End quotes. This third article is titled, SunPower Stock Has 87% Upside, according to one Wall Street analyst. It's by Rich Smith and found on Fool.com. Here's some of his comments. He starts off with a question. Is SunPower stock a buy in 2024? Quoted on The Fly Monday, Richardson explained he cut SunPower's price target because green energy stocks have been underperforming this year and inventories are still bloated. But the analyst remains optimistic that inventory channel clearings are nearly complete, and so the bottom is not far off. Combined with rising electricity rates, that's going to create more demand for cheap solar power and create the potential for SunPower sales to turn around. Is he right? As the saying goes, it's hard to make predictions, especially about the future. Still, if the bottom has truly already arrived for solar power stocks, then it's arrived remarkably quickly. In related cyclical industries, such as semiconductors, for example, oversupply cycles ordinarily take 6 to 18 months to reverse. But SunPower's sales have only been falling for a couple of quarters. According to data from S&P Global Market Intelligence, sales were still on an upswing as recently as the second quarter of 2023. While it's possible SunPower is going to get away with just a 6-month downturn, therefore I wouldn't bet on it. And I wouldn't bet on a company valued at $380 million and burning more than half that amount, $201 million in cash every year, doubling over the next 12 months either. More than likely, SunPower stock still has at least a few more rough quarters ahead of it. End quotes. The last article is titled 3 Renewable Energy Stocks That Will Make Other Investors Green with Envy. It's by Rick Orford and also found on InvestorPlace.com. Here are some comments by Mr. Orford. For this analysis, I started with a screen of the top 30 renewable energy companies based on the market cap. Then I filtered the list for the following criteria: year-on-year quarterly net income growth of over 30%, analyst rating of 4 and above, that's moderate to strong buy, and an upside potential of over 50% based on high target prices. This list of renewable energy stocks to buy is sorted in descending order based on upside potential. 1. First Solar drives the global transition to renewable energy by harnessing the sun's power. The company manufactures thin-film photovoltaic solar modules, which offer a lower carbon alternative to conventional crystalline silicon PV modules. First Solar's business operations include manufacturing cadmium telluride solar modules, project development activities, operations and maintenance services. The company has a presence in France, Japan, Chile, and of course the United States. First Solar's Q4 fiscal year 23 financial report is a relief for many investors. Its revenue increased to $1.16 billion from $1 billion year over year. Earnings per share also recovered considerably from a 7-cent loss to a $3.27 profit per share. Its metrics, including its year-over-year net income growth of 84.65%, make it easy to understand why analysts rate the stock a strong buy. With a high target of $269, over 52.6% upside potential from its current levels. 2. Fluence Energy is a driving force in integrating renewable energy into power grids. It delivers highly modernized energy storage solutions worldwide. The company offers various energy storage products like GridStack Pro, GridStack, SunStack, EdgeStack, and UltraStack. It caters to applications such as large-scale front-of-the-meter DC-coupled storage and solar, commercial and industrial use cases, and more. Fluence Energy's Q1 24 financials are pretty decent, despite minor setbacks in metrics. Its revenues increased from $363.95 million to $310.46 million year over year. Its gross profit increased from $12 million to $36.39 million. However, Fluence Energy's net quarterly income loss was $25.55 million, an improvement from $37.1 million last year. Analysts rate FLNC stock a strong buy, targeting a high price of $37, which translates to 107% upside potential from its current levels. 3. Brookfield Renewable Partners is a prominent player in the renewable energy sector and owns various assets worldwide. The company's portfolio includes hydroelectric, wind, solar, and energy storage facilities, with an operating capacity of approximately 33,000 megawatts. Moreover, Brookfield Renewable Partners has a significant development pipeline and invests in sustainable solutions such as renewable natural gas, carbon capture and storage, recycling, and nuclear services. Brookfield Renewable Partners reported pretty decent Q4 23 financial results, with its all positive year-over-year performance. Its revenue slightly increased to $1.32 billion from $1.2 billion. On top of that, the company's net income increased significantly to $264 million from $60 million, placing its earnings per share in a recovering trajectory of 1 cent from the 16-cent loss reported in fiscal year 2022. Analysts rate Brookfield Renewable Partners stock a strong buy with a high target of $52, reflecting over 152% upside potential. End quotes. Now one other honorable mention, title, 3 renewable energy stocks to sell in May before they crash and burn on InvestorPlace.com by Asintia Pazrika. And one article from Australia, title, Does Australian Ethical Investment Deserve a Spot on Your Watch List? On Yahoo.com by Simply Wall Street. Well, these are my top news stories with the stock and fund tips for this podcast titled Renewable Energy Stock Picks. Now, please be sure to click the like and subscribe buttons on Apple Podcasts, Google Podcasts, or wherever you download or listen to this podcast. That helps bring these podcasts to others like you. And please click the share buttons to share this podcast with your friends and family. Also, it helps in the ratings, of course. Let's promote ethical and sustainable investing as a force for hope and prosperity in these deeply troubled times. Contact me if you have any questions. Thank you for listening. I'll talk to you next on May 31st. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY Ethical Sustainable Investing Pays tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit, which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.